Yes, hello guys, how you all doing? Nagishapu, and yeah, yesterday remember we had an analysis. We did an analysis on Nasdaq, where we had said that on daily we are all looking to buy from here. That was our conclusion, that we are going to buy from that zone, right? And then someone in the comment section asked me a very interesting question that I think it's only fair that I answer it with a video for everyone to, to sort of. I'm sure there are people that they may also not know the concept that I'm going to show now. So the question, as you can see on the screen, was that what would happen then if the price was to break this? Because we are saying we are going to buy from this. The price, remember, the price mustn't pass this point. So now the question was, what if the price does this and doesn't give us opportunities to buy, or it gives us opportunities to buy, but then they fail, and then it ends up breaking to the downside like that? And then now it says, what would then happen? It's a very nice question if you think about it. So I'm just going to show you how you should go about that. So these are the things that you should do when you're the zone that you're looking to take trades from, especially the zone that broke the trend line and then now it's coming for the second time. If it gets violated, what does that mean? Number one, it will mean now we have a lower low, meaning you have to adjust. That's point number one. Adjust your trend line. So remember, when you have a lower low, this would be a lower low because it will be lower than this low here, right? So which means the highest point that gave us the lower low must be part of the trend line. So you can put your trend line somewhere there, or you can put it like that. But the fact is that when you have a lower low, the low that gave us, or you can say this is my thing. If it's like this, I'll just put my trend line there. Because of what? This high would need to be part of the trend line. Why? Because it's the one that gave us the lower low. So that's the first thing that you would do if the price happens to break this support. You would then adjust your trend line because you'd be having a lower low, right? And then point number two is, what would then happen? Because remember, if the structure on daily has been violated, it will mean now we are no longer going down. We have to go up, because remember, the way the price moves in terms of the scale, the scale of the price, ne? Well, if I go down, it's not gonna help me, because if daily is broken, then it means obviously H4 has been going down. Obviously daily, H1 has been going down for a very long time. Because remember, when you're trading, if let's say you're trading the sequence of what daily H4, H1, it means if they're all pointing up, for them to go down, H1 is the one that's gonna go bearish first, followed by H4, followed by daily, because there's too many bars, candlesticks on H1. So 3 candlesticks can break a trend line on H1, only to find that when you're switching up to H4 is still holding. So it's the same thing here. Should this one be broken to the downside like that, we need to go up and see how is the structure there, because if we go down, it's not going to help us. They have already been violated, obviously. So we are moving up. If it goes down, let's check weekly. How would the weekly look like? The weekly would mean that it has to come and break that, which means Leonide will be having a lower low. It means what? Weekly would also be giving us a lower low, which means adjust trend line on weekly. The weekly trend line wouldn't be there anymore. It will come down here. And then what would then happen on monthly? The monthly chart, okay, my network is kind of bad. So remember, if we get that low, it means what? We have hit this zone here on the monthly, which is what? Our buy area, which is our support. And remember, when you're looking to buy, the more the price moves down and giving you entries lower down, it means what? It's a good thing for you, because of what? It is increasing your profit margin. Because if you were to buy from this, and then if you were to buy from, let's say you were to buy from here, it's better to buy from here than to buy from there, because of what? We are all targeting this area. And if you bought there, that's your profit margin. And then if I bought here, my profit margin is larger. So the deeper it goes, the more profit margin it gives us. But the point that I was trying to make is that if this gets broken, it means lower low. That's the first thing that should come to your mind, which means adjust your trend line, which means we are no longer looking to buy. We can only buy from what? From a higher time frame support. If the higher time frame is holding in terms of what? The trend line. So if we go to weekly and you find that the weekly you don't have reasons to sell, to buy. So we would wait for it to go to the higher time frame, which in this case would be what? Preferably it comes to this. Then that's where you will take it. I hope I've answered your question, my guy. Every time your thing gets taken out, every time you have a setup like this or like this, and then you get a breakout of the trend line, or you get a breakout of the trend line, right? Every time something like this happens, and then you are coming and saying, okay, let's use a different one. You are saying, this is my the area that I'm interested in, my support, I'm going to buy from that, or this is my resistance, I'm going to sell from that. So every time you have stuff like this, but the price comes down and does this, comes up, it doesn't give you the chance to sell, or it gives you a chance to sell but it fails and you take a loss. Every time that happens, the first thing that needs to come to your mind is that we made a lower low, or we made a higher high. Therefore, I need to adjust my trend line and make sure that this high here, or this low here, that gave me the higher high or the lower low, it has to be part of the trend line. So meaning your trend line must come and pass there, or it must go and pass there. That's the first thing, the first approach. Then it means the force to the downside is too much. Then if your trend line is passing here, you can mark a new resistance, and then you're more than welcome to sell like this. You're more than welcome. If it comes back to the new trend line or the support, you're more than welcome to buy like that. But all I'm saying is that your mind, you must program your mind to a point that, in a way that every time you get a new high or you get a new low, and you must just adjust your trend line. That's a good start. So in conclusion, we can say if the price comes down, you adjust your trend line, you can mark a resistance, and you can look to sell up until the price can hit a higher time frame zone, which in this case would be going back to this. Then that's what we'll be looking to buy, and then we are going to target that. I hope I answered your question, my guy. A lower low or a higher high means adjust. Always have this written somewhere. Adjust your trend line. When you have a new low or you have a new high, you must adjust your trend line so that it involves the high that gave you the low. If it was in this case and you have a new low, this high must be part of the trend line. Or if it was in this case and you have a new high, this low must be part of the trend line. I hope you answered, my guy. And then, yeah, I'll see you on the next one, good people. Don't forget to like and subscribe. All right, sharp.